In this video, we show some trade examples where the SMI price action tool from Master the Markets is used together with the VSA Lite toolset that's contained in the Trade to Win package. This first trade was taken in the dollar-yen spot forex market. This is a 5-minute chart, and a potential buying indicator has appeared here, and the lower and upper trigger lines have been drawn. We're now looking for a long trade. 4 bars later, the SMI indicator appears. This blue dot is the confirmation signal. Once the short-term trend indicator has turned green, we entered at 131.286. Although the SMI indicator throws a short indicator here, we ignore it because the short-term trend is still long. We then exited the trade at 131.401 as the short-term trend had turned. The next trade is a short trade in the Aussie-US dollar currency pair. A potential selling bar has appeared on the 1-minute chart, and the lower and upper trigger lines have been drawn. As you can see, the SMI indicator has triggered on the same bar as the potential selling indicator. This provides an extra level of confidence that a short trade setup is about to appear. Once the bar goes below the lower trigger line, a trade was entered at 0.69104. Again, when an SMI indicator fires, showing a potential long trade, we ignore it, because the short-term trend is still showing red dots. The red dots change to grey, and there's a supporting SMI indicator to the long side, so we exit the trade at 0.68982. The indicator combo works in all markets and timeframes. Here is a Bitcoin 3-minute chart. Here is an example where the Trade to Win package would miss a trading opportunity because there's no potential buying or selling indicators signaling the start of a setup. In this case, a VSA test confirmation indicator has appeared. Then an SMI confirmation dot appears on the next bar. Then the short-term trend dots change to green. We entered the trade on the following bar with a buy order at 21645. All the time the short-term trend dots are green, we stay in the trade. Finally, on the first red dot, we exit the trade at 21759. Here is an example of a longer-term stocks trade. The stock is Tesla, and we're looking at a daily chart. An upthrust VSA signal appears, a major sign of weakness. We enter on the bar at 332.67. An SMI confirmation orange dot appears on the next bar. This provides an extra layer of confidence that the trade will be successful. Although there are several VSA signs of strength and an SMI long indicator, we continue the short trade until the short-term trend dots change from red to green. We exited the trade here at 228.49. Using the two methodologies together provides a multi-dimensional approach to trading. These two perspectives together result in higher probability, lower risk trades. Here is another stocks trade, Netflix on a daily chart. It's a long trade which is signalled by a change in direction on the short-term trend dots. Once an SMI confirmation dot has appeared, we enter the trade on the next bar at 543.71. As the trade progresses, we see a VSA test confirmation signal, which supports the trading decision. Once the short-term trend goes grey, we exit the trade at 592.64. The final chart example is on the 15-minute S&P 500 E-mini futures contract. A potential buying indicator has appeared. Once the short-term trend dots go green and the price rises above the upper trigger line, the trade is entered, and the entry price is 4111. As you can see, there are several VSA test confirmations which support the long trade. As the bars narrow and the short-term trend dots change to red, we exit the trade at 4172. Volume spread analysis and price action are very complementary methodologies, and for the first time we've brought both onto the charts in the TradingView platform. Using this combination provides some valuable benefits. Where the indicators align, there's an increased probability of a successful trade, which boosts the trader's confidence. The use of both tools can help traders enter the market sooner and keep them in for longer. By using the combination, we can identify trades which would not have been triggered by either methodologies on their own. And finally, by using both methodologies together, a trader benefits from greater consistency and increased confidence when trading any market in any time frame.